Hi everybody, Steve Griffiths here, developer of the MT Predictor software program. In this video I'd like to look at a lovely trade that has just unfolded on a 5-minute chart of the 6E. This is the CME future of the euro against the US dollar, so it's a currency chart. I find that currencies tend to trade better on the CME, and as such if you use the sixes, because there's lots of different ones for the different currencies that you can check out on the CME website, they tend to trade better on shorter time frames than standard forex. So they're a lot better if you want to trade currencies on short time frames. It's best to use these futures on the CME. But anyway, here we have a standard MT Predictor trade setup, a TS4 sell against, it actually unfolded on that bar there, which is a black STF, so therefore that meets the standard criteria for a standard MT Predictor trade setup. So let's put the analysis on. Let's click on that bar there, and that then gives us the position sizing, which, as you can see, to keep our risks small and under control, it suggested selling 2 contracts at this level. The trade was filled here. Our stop was never hit. The market went down, and at the first target, again using the standard trade management guidelines, you then have to look down at the STF and see how it relates to its strength band. The strength band is this grey line. So you can see at this point here, if I move the cursor down, the STF is beyond the strength band, and therefore it indicates that the market is strong and therefore is likely to trade beyond the first profit target. So for this we use our trailing stop, which is the ATR stop, which is our red dots. So if I now use the manual risk reward tool to place the what the profit would be when the market was stopped out, which would be as the market went through the ATR stop, which was that level there. So I just missed that slightly, so I'll just do that again. It was actually that level there, which was actually 4.9R, so that's near enough a 5R profit. Now how does that relate to some other trades that have been unfolding on this market? If we go forward a bit, there was a potential buy setup here as indicated by our history triangle, but this was against a red STF, so you should avoid that. If I go forward a bit further, I can put the analysis on this TS2 sell, which indeed was filled and then stopped out. Now the beauty of using correct position sizing is that although this was a losing trade, the loss was what we call minus 1R, in other words minus 1R, 1 risk unit. So this trade here would have been minus 1R, and as we've already seen, our TS4 sell back here would have been plus 5R. Now that's the key to successful trading, well, plus 4.9R, so that's near enough plus 5R. So anyway, that's the key to successful trading, having trade strategies that when they go right, they make profits that are far greater than the losses when they go wrong. In other words, small losses and big profits. That's the key to successful trading, and that's what MT Predictor is designed to do. And as you can see, here's a great example on a 5-minute chart on a currency. In this time it's the 6E, which is the euro against the US dollar. So a great example here unfolding on a currency market on a 5-minute chart for you.